Thank you, everyone, for joining us for our final session for today, which is on GCC Economies in 2021 and beyond. And our speaker is Tim Callen, Mission Chief for Saudi Arabia and Assistant Director, Middle East and Central Asia Department of the International Monetary Fund. Welcome, Tim, and please do take the floor.
Thank you. Thank you, Ed. I was going to talk both a little bit about the outlook and then the policy challenges, but I think what I'll do is just talk 5 minutes about the outlook and then see if there are any questions. And then at that point, I'm happy to try and answer a broader range of questions. But let me start just looking at the growth outlook. I think what we're seeing across the GCC, clearly at different paces depending on the country, but we're seeing a rebound in the non-oil economy this year after the COVID-induced recession last year. So last year, our estimate is that non-oil growth in the GCC was -4%. This year, we think growth will be somewhere around the region of +4%. And that clearly, generally, as the lockdowns have eased, from the second half of last year. Clearly, again, sort of it varies by country. Some have eased, some have eased, and then started reimposing a few restrictions. But generally, we're seeing a pickup in non-oil activity. That's varying across the different countries. Clearly the extent of the recession last year was somewhat determined by the reliance on tourism services, and those with weaker fiscal positions clearly struggled to provide the support that others could provide. So those type of economies saw the biggest hit in non-oil growth last year. And then we also think we'll probably see a somewhat weaker rebound this year than those countries less reliant on the tourism and services. Overall GDP, of course, declined more than non-oil GDP last year because of the substantial cut in oil production, generally under the OPEC Plus agreement, where countries are members of that group. But of course, the broader weakness in the global oil market really meant that was true across the board. And again, this year, we expect overall GDP growth to be weaker than non-oil because the oil sector will continue to recover relatively slowly in terms of production. On inflation, so last year, if you take out Saudi Arabia, where clearly the VAT rate increase in the middle of the year boosted CPI inflation, in the other countries, 4 out of the 5 actually recorded negative CPI inflation last year. This year, with the recovery, with higher domestic energy prices, where these are linked to export prices, and also with rising global inflation, particularly in the food sphere, we're expecting higher inflation of around 3% this year. But that's still, relatively well contained and is not an issue from our point of view. Looking on the fiscal and the current account side. Clearly, last year we saw some pretty big fiscal deficits in the region. I think 3 out of the 6 countries recorded double-digit deficits. And that was mainly caused by the sharp drop in oil revenues that we saw, but also additional spending pressures in some countries as well. Looking forward, clearly we're seeing much higher oil prices this year than last year. That'll result in a substantial rise in oil revenues and a substantial reduction in the fiscal deficit in the region this year. Also, some of the COVID-related spending will likely ease off this year. And then in countries like Saudi Arabia, we've seen the tripling of the VAT rate, removal of the cost of living allowances that were introduced in 2018, Oman introducing a value-added tax. So there are a number of measures in addition to the rebound in oil revenues, which will help on the fiscal deficit this year. And it's really a similar story on the current account side, where we saw a current account deficit in the region last year, but are expecting to see a rebound into a current account surplus this year as oil revenues again rebound. what does all this mean? I think if we look at the the COVID crisis, and I often ask, sort of, what are the lessons of the COVID crisis, and how has it changed the economic challenges facing the GCC region? And I think my answer to that is it's not really changed the economic challenges facing the region. It's really reiterated the challenges that have been there for many years, and clearly those are the reliance on oil revenues from the fiscal side, the external side, but also then how that feeds into the real economy. We're seeing continued volatile oil market. We saw oil prices down very low, April, May last year. We're now seeing them up for Brent in sort of low to mid 70s. So managing this oil price volatility and oil revenue volatility, because of course production is also very important on the oil side for these countries, is really a challenge from the fiscal point of view, but also then how that feeds into the non-oil economy as well. And really here, I think the emphasis is on strong buffers to manage these these shocks, which inevitably are going to come again in the future. So having strong fiscal buffers, good asset positions, relatively low government debt, and when oil prices are high, making sure that spending doesn't increase. So you're actually in periods of oil price increases, you're seeing smaller fiscal deficits or even fiscal surpluses to save for the future. But it also matters in terms of the financial sector as well, where strong capital buffers, strong liquidity buffers, I think, are very important to help the financial sector be able to manage through these periods of volatility. And of course, this all goes again to the issue of economic diversification, which has been on the agenda for many years. It's been revived again recently in ambitious vision realization programs. And I think many of the reforms we're seeing in the region are exactly in the direction of what we think is needed to over the long term diversify the economy. But one, it takes a long time for these reforms to have an impact. And I think secondly, we have very few examples of countries which are very dependent on oil who have successfully diversified. So we don't have a lot of evidence of how these reforms will impact economic growth in the non-oil sector over the long term. And it's I think a question of pushing forward with these reforms with the expectation that over time they will have a positive impact. And I think particularly one focus needs to be in the area of the labour market for the GCC countries, where I think particularly getting the balance right between nationals and expatriates working in the private sector, the attractiveness of government jobs relative to private sector jobs, and then particularly education and training for nationals. This is a long-term project, I think, to improve the quality of education and training, which is critical for productivity growth in the longer term, which is ultimately going to be the driver of GDP growth and incomes of workers over the longer term. So let me stop there, and I'm happy to take any questions.
Oh, thank you so much, Tim. And apologies for starting a little bit late. So just a question from the audience, which is basically, which sectors are you most enthusiastic about in the GCC? Which sectors do you anticipate will achieve the most growth going forward?
Yeah, I mean, to be honest, we're very much a macroeconomic institution. We don't really get into sector-specific policy, so that's sort of really not a question I'm sort of equipped to answer. I mean, clearly, this is not my view. I mean, but where the strategies I think are aiming for is clearly tourism. If you take Saudi Arabia, both developing, more of the religious tourism and then the non-religious tourism sector. I think, probably renewable energy is clearly one area, which in some sense, when you're, so, blessed with oil resources seems a little odd, but, clearly the region is blessed also with a lot of sun, wind in certain areas. So I think, sort of renewable energy is another area. I mean, the previous discussion in terms of Islamic finance, I think is also probably a growth area. Clearly, there's a desire to develop, sort of more, high-end manufacturing technology skills. Here, I think it's, really going to be a question of, sort of, can you develop those sectors in terms of having the productivity, the skills, and being competitive in those sectors with wage expectations and productivity, realizations that we have in these countries. And I think that's really where the focus on education, training, substantially strengthening those areas becomes really important.
Well, thank you so much, Tim, for your time and your input into the discussion today. It's been very much appreciated. Thank you so much.
Very good.
Thank you.